Best pick KSO-SPI market close for June 16. We're looking at a genuinely remarkable and sharp decoupling in the South Korean equity markets today. On one hand, the benchmark KOSPI just surged by 2.11%, closing out at 8,726.60. To put that into perspective, this powerful upward push puts the index within just 3% of its all-time high. It's a huge psychological and technical milestone. But directly contrasted against this, the tech-heavy KOSDAQ actually dropped by 1.48% to close at 1,018.68. So while the heavyweights pulled the main board higher, the smaller cap index faced some serious profit-taking. We're seeing a very distinct divergence in market performance here.
So, what was the primary force behind this massive KOSPI rally? Foreign institutional capital. Foreign investors aggressively drove the market higher, throwing down a massive 1.5 trillion Korean won in net buys. And what's absolutely critical to note here is the consistency. This marks their third consecutive day of net purchases. This sustained influx of foreign capital is literally the engine pushing the KOSPI toward record territory right now, and it reflects a major shift in global sentiment back toward domestic large caps.
Okay, let's dive into this. We're going to look at the global drivers and macro factors, which are the main catalysts behind today's movements. Three major global events are really dictating the current market environment. First up, the official signing of the U.S.-Iran Peace Memorandum of Understanding. This has significantly reduced geopolitical risks and provided a massive boost to global risk on sentiment. Second, as a direct result of that cooling tension, WTI crude oil has fallen into the low 80s per barrel. That's a 3-month low, and it really eases concerns about imported inflation from manufacturing-heavy economies like South Korea. Finally, the market is laser-focused on the upcoming Federal Open Market Committee meeting. This is going to be the debut for the new Fed chair, Kevin Warsh, and global capital is actively positioning itself ahead of any new monetary policy signals he might drop. These macro drivers absolutely pushed Wall Street to historic new heights on June 15th. Completely setting the stage for the Asian market open. The Dow Jones Industrial Average hit a brand new record, closing at 51,671.03. That's a solid gain of 0.92%. The S&P 500 moved upward by 1.65% to break right through the 7,500 barrier, closing at 7,554.29. But the most significant move by far came from the tech sector. The Nasdaq surged an impressive 3.07% to finish at 26,683.94. All that global risk appetite, it flowed straight into the South Korean market. Moving from that macro view, let's look at how semiconductors lead sector performance and how this U.S. tech rally impacts our domestic heavyweights.
The absolute standout metric overnight was the Philadelphia Semiconductor Index, which spiked an incredible 5.45%. This aggressive upward move was driven by a really strong rebound in demand expectations for AI infrastructure and high-bandwidth memory, or HBM. As those global supply chain anxieties eased up following the geopolitical news, capital just rushed right back into the chip sector.
And this brilliantly illustrates how that U.S. semiconductor surge directly boosted our domestic heavyweights. South Korea's chip giants were the prime beneficiaries of this global tech rally. SK Hynix saw its shares jump by a robust 4.11%, while its affiliate, SK Square, surged an impressive 6.23%. Because these large-cap tech stocks carry such a massive weighting in the KOSPI, their individual wins were the main mathematical driver behind the overall index's 2.11% leap today.
But, the entire market isn't exactly feeling the same enthusiasm. Let's pivot over to domestic IPO market struggles and look at a really clear divergence in market liquidity.
Now, what's really interesting about this is the clear paradox it reveals regarding liquidity. Despite the KOSPI securely crossing that 8,700 mark and marching higher, the primary market is remarkably cold. Out of the 15 new listings in the domestic market this year, 11 of them, that's 73%, are currently trading below their initial offering price. This tells us that while capital is aggressively hunting for established large-cap growth, it is simultaneously running away from the risk associated with new, smaller-cap equity offerings. A major structural reason for this chill in the domestic IPO space is the sheer magnetic pull of global alternatives. We're talking about massive global listings, most notably the roughly $100 billion or 100 trillion won SpaceX IPO on the Nasdaq. It's drawing immense amounts of global liquidity. This creates some very real structural concerns that capital is effectively being drained away from domestic IPO markets in favor of these monumental global-scale tech opportunities.
Next, we'll transition into technical indicators and forex data, effectively monitoring market health and capital flow.
Let's move to and see how this builds a picture of technical market tension. If we trace the KOSP's 50-day moving average disparity, we see a fascinating progression. It hit an extreme level of 131% in late May, which is a level very reminiscent of historical market peaks. It then naturally cooled off during an early June drop, relieving some of that technical burden. However, with today's sudden 2.11% jump, the index is facing immediate re-expansion pressure. The sheer speed of this latest rally means technical overheating is, once again, a metric we have to monitor extremely carefully.
Conversely, when we look at the KOSPI Volatility Index, or VKOSPI, we see a much calmer picture. Just recently, this extreme fear index hit a significant peak of 89.47 amid global uncertainties. Today, however, we are witnessing a clear downward stabilization. This drop in the volatility index directly signals a rapid easing of market anxiety, which frankly aligns perfectly with that heavy influx of foreign buying we discussed earlier.
Looking at the official capital flow data from the Bank of Korea gives us even more context on this shift. The data shows a massive $26.2 billion outflow of foreign capital during the month of May, predominantly driven by stock sell-offs. But as we transition into June, we are seeing a complete trend reversal. Those heavy outflows of May have pivoted into the aggressive foreign net buying we're recording this week, completely altering the market's current liquidity landscape.
Naturally, this kind of capital flow heavily impacts the currency markets. The previous week's US dollar to Korean won exchange rate stood at 1517.59 won. Moving forward, the combination of the US-Iran MOU weakening the dollar globally, paired with the massive influx of foreign net buying in Korean equities, is putting clear, undeniable downward pressure on that exchange rate. So the crucial point is that these broad technical and macro shifts are finalizing a highly specific financial landscape. The stabilization of the bond market is super evident, as the 3-year Treasury yield has dropped to 3.835%. Furthermore, the sheer volume of capital moving through the markets right now has created an absolute windfall for financial institutions. Domestic securities firms actually recorded a staggering 77% profit surge in the first quarter, directly driven by these exceptionally high trading volumes. To ensure you stay ahead of these rapid shifts in capital flow and market data, please make sure to subscribe and like this explainer for daily, data-driven market insights tailored directly for you, the focused foreign investor. With liquidity surging back into large caps, the real question we have to ask ourselves tonight is, will this foreign capital influx sustain an entirely new era for the KOSPI, or is a technical correction just around the corner? Thank you for watching.